Hi, I'm Richard Watts, founder of HR Maritime. Welcome to Commodity Brief, the show all about commodity trading, in partnership with Dukescopy TV. In this series, we've been looking at all the different aspects of commodity trading, and in this particular episode, we're going to be looking at insurance and how insurance works in the industry. So whenever we're dealing with commodity trading, it's important to realise that we are dealing with some very, very large amounts of money. And so it's important to be sure that we have correctly insured the cargo or the vessels that we are dealing with. In order to give you some ideas, if we talk about a grain cargo, we could easily have a cargo of 60,000 tonnes of grain, and the cargo would be worth about $30 million. If we move on, we could also have a cargo of oil. And if we're dealing with a cargo of oil, then we could easily have a cargo which is worth $150 million. And so these are representing very, very large amounts of money. And otherwise, if we take something like vanilla, vanilla is a very unusual commodity because it's a very, very high value commodity. And just one container of vanilla can be worth up to $1 million, which means they need to have an army escort in order to transport it from the fields where it's produced to the port in Madagascar. Otherwise, if we look at commodities such as bagged rice, cargo of bagged rice, we might have 30,000 tonnes of bagged rice, and this could easily be worth about $15 million. Now, bagged rice you have to be very, very careful with, because first of all, the bags can get damaged themselves because they are being handled by manual labourers. And also we have problems with mould, and so if the moisture content is too high, if there's water comes into the vessel, then the cargo can get mouldy. And also we have the problems of theft. And this is particularly difficult because it is one of the few commodities where you can literally take a handful of rice, put it in your pocket, go home, put it in boiling water, and you've just fed your entire family. And so it's very, very difficult to be upset with people in West Africa who are discharging cargoes of rice who steal the cargo. And so it's not about how to stop them from getting it, it's how to stop them from damaging cargo that they're not going to take. Then if we move on, we also have a look at vessels. And so we can easily have an oil tanker, one of the modern oil tankers, which can be worth up to $150 million. An oil rig itself can also be worth $150 million itself. And so we're talking about very, very high values, and also a handy-sized vessel that we looked at in an earlier episode, 20 to 45,000 tonnes of cargo, can easily be worth about $15 million. So whenever we're dealing with commodity trading, both the commodity itself and the vessels are very, very expensive. We need to be sure that they are properly insured, and if there's a problem, we are going to be covered. So we can find an awful lot of information about this. There are excellent websites such as GCaptain, which gives a lot of up-to-date information on the whole of the maritime sector, on commodity trading, and they have a recent report on the casualties in 2014, saying that they've actually been reducing. That being said, if we look at 2013, there were about 54 vessels which sank during that year. When we think about the world, we think that we know the world very, very well, but in fact, the oceans are very, very open, wide places, and we have very little control over what happens in those spaces. So if we are going to be insuring our cargo, then we need to talk to an insurance broker. A broker is going to be providing us technical information, knowledge on the insurance side. They're going to be explaining to the insurance underwriters how we trade, what the vessel is, all the different details, so that everything is very clear. And so in terms of insurance, we have different types of insurance. We have insurance for cargoes, and so we have the cargo insurance itself, which covers physical damage or loss to the cargo. We have charterer's liability, which covers the liability that charterers might incur when they are undergoing a voyage. We also have other insurance such as credit and political risk. And we have things such as free outturn guarantee, which guarantees us if there is any shortage in the voyage, if there's any loss of weight. On the other side, we have insurances which we use for the vessels. Vessels, we have hull and machinery insurance, so that insures against the physical damage to the vessel. We have what is called protection and indemnity insurance. This is a liability insurance which insures against claims from third parties. And of course, we have war risk insurance, which is very, very important because that also covers situations involving pirates, which we've seen an awful lot of in East Africa. And fortunately, it is reducing at the moment, but we still need to be very, very careful. And so whenever we're looking at insurance, we have to think of a number of different things in terms of our policy. First of all is the deductible. This is the part of any claim that we will be paying ourselves. Now, obviously, we want to keep that as low as possible, but at the same time, if we take more of the claim ourselves, then we will be paying less premium because the underwriters are taking less risk. There's also loss prevention. Loss prevention is very, very important because we want to analyse our business and understand where we are losing cargo, where damage is coming in, and also we have the loss ratio. And so if we look at our policy, that is the difference between how much we're paying and how much we are receiving back in claims on the other side. And obviously, if we are paying less than we're receiving back, then the insurance companies are making a loss, and this is not going to work in the long run. So that brings us to the end of this episode looking at insurance. In the next episode, we're going to be looking at trading companies and how they are structured and what trading companies we have here in Geneva. So thank you very much for watching Commodities Brief in partnership with Dukascopy TV. Please click back soon.